Thanks. I'm really pleased to be here today. So before I begin, I would like to thank you for the opportunity to speak about a topic that I am very passionate about. Renee read my bio, but what she didn't say is that I wrote a book called The Trader's Pendulum, The 10 Habits of Highly Successful Traders, and that'll be my topic for today. I'm just trying to, and I want to thank all of you for being here and taking time out of your busy schedules. I know you have a lot going on. We all have a lot going on these days, but it's really important that you make the time to focus and to really try to pick up some golden nuggets from today's sessions. Hopefully you'll pick up some things from this session today. So this is what this book is about, the New Trader's Guide to the Business Psychology and Hype in Trading, and it gives you a practical foundation to building your trading business, i.e. building that trading account. So are you spending too much time spinning your wheels without making progress, not sure which techniques to apply, want to waste less time analyzing the markets and more time taking profitable trades? Well, in today's session, let me help you to see a clearer vision for your trading business by sharing with you what I think are the top 3 habits for you to develop in your trading business. And at the end of my presentation, I will take questions, of course. I'm going to share with you a way to stop spinning your wheels and waste less time analyzing the markets so you can take more trades that make sense to your bottom line for the price of a lunch. So let's get started. All traders ride on a pendulum every day. I'm sure you can relate to that, riding on a pendulum. And unsuccessful traders ride the pendulum back and forth with no real idea of the pendulum swing. But successful traders recognize that the pendulum swings and they ride it mindfully. And as a result, they make better trading decisions and better trades. So the pendulum represents 2 situations arising from trading the markets. And the one, you know how a pendulum swings back and forth? Well, on the one end of the swing, there is one thing happening, and on the other end, there is another, often opposing thing going on. And ideally, you as a trader want to remain or get back to neutral position, because staying at either end can be unproductive at times. Now, there's nothing that you can do about the swings of a pendulum, but you can learn how to ride them. The lack of skills to weather the swings is what makes trading an emotional, psychological roller coaster ride for traders. And believe me, I've experienced my own roller coaster rides myself. I started trading for an investment bank in the 80s on Wall Street, and I rode the British pound down from 240 down to 105, back up to 150 as the interbank British pound trader for the investment bank. So I experienced it and continue to experience it, but I learned how to manage it. So there are 3 types of pendulum swings that I just want to touch on. The market pendulum, we sort of touched. The market trades up and down all the time. And when you enter the trade, right? Do you enter once the market has moved up a lot and you want to be part of the herd? You want to get in because you think you're going to miss the boat? No, you've got to be patient and wait for some kind of retracement, unless it's a wave 3, which is when you have very few retracements, and the retracements are very, very shallow. So you need to understand the market cycles and understand the personality of the market cycles, and so in order to trade this market pendulum. So you also need to have a strategy which can trigger your trades and plan your trades. We'll get more into that. And as you can gather from the bio, I use Elliott wave analysis to ride the market pendulum. The next is the financial pendulum. Making money from trading isn't a one-way street. On the one end of the swing, there are times when you make money, and on the other end, you lose money. So both winning and losing are part and parcel of trading. Now, I've met many, many traders who say, I don't like to lose money. Well, I don't think you're going to be successful if you don't like to lose money. There's one thing about not liking to lose money, but accepting it gracefully. Now, I can understand not wanting to lose and really trying to compete with yourselves, which is what I used to do while at the bank. I used to play a game with myself to see how many winning days I could have in a month. Now, I never got to the full month of winning days, but I did get close. I think I had 1 or 2 losing days, for a couple of months. But those are the games that I played with myself and continue, to do, just because I'm competing with myself. I want to improve my results. So financial pendulum. The most important thing about taking losses is taking losses that aren't so big. Now, many traders, and you might be, include yourself part of this, have blown accounts, have taken larger losses because they've moved stops. We've all been there, done that. The important thing for trade management is not to do that. It's to keep your stop where it is and to extend those profits. So we'll touch more on that a little bit later. Third, emotional pendulum. The emotional pendulum, I like to describe it as the fear and greed continuum. So on the one end of the pendulum swing, you have the desire to earn more and more money from your trades. If you have some successful trades, you might be driven by greed to take larger positions irresponsibly. That's quite possible. And on the other hand, you are in fear of losing money, and your actions might be held back by fear. So learning how to balance between these two, fear and greed, is your focus as an investor or a trader. Now, here are some examples. This is a chart. These are some scenarios right from my book. I have scenarios interwoven in between the 10 habits. So just practical stories and things about being on the emotional pendulum. And I think that fear versus greed really encompasses most of what is below. Okay? Calm versus nervous. Well, we can be calm versus nervous either on the fear side or the greed side. Self-doubting versus overconfident. When we're self-doubting, we're more likely on the fear side, unable to pull the trigger. When we're overconfident, we're just so excited about the market, we want to take every single trade that we see or don't see that is planned or unplanned, and we get greedy because we've just had a good run and we want to continue. We think our run will continue, and it doesn't. Cautious versus reckless trading. Organized versus disorganized. Flexible versus stubborn. So we've all experienced the emotional swings in trading. So what I want to ask you today is, do you want to become a trader or investor who can ride the pendulums well? And I want to see all yeses. Do you want to become that trader or investor? And if you've typed yes, and I see some yeses, then you will need to become a successful entrepreneurial trader. But first, I need to tell you about the technical trader's trap and how you become an entrepreneurial trader. And we are going to get into the 3 habits, top 3 habits. So meet Farah and Fred, are technical junkies in the technical trader's trap. Farah, a retired IT professional, decided to take up trading. And she spent 3 years searching the internet for the next best system, the next best guru. She found herself down about $50,000 between money spent on buying systems and losing money trying them. So let's call her frustrated Farah. And Fred quit his job because his ex-colleague had told him that the life of a trader is really, really cool and he should get into it. So he impulsively quit his job and just remained in the seeking mode, endlessly going after every secret strategy to guarantee success. So I call Farah and Fred technical junkies. They've fallen into the technical trader's trap. They're out of shape. They have no business plan. They're not making money consistently. They lack discipline. They trade emotionally with no trading plan. So our goal as traders is to move from the technical trader's trap to become entrepreneurial traders like Steve and Stacy, who are in shape, have a business plan, they're making money consistently, and yes, they know how to take their losses as well as profits. They trade with discipline. They trade unemotionally, and they have a clear trading plan. So this is Steve and Stacy. Now let's talk about the trader's quadrant. On the left, we have the technical trader's trap, and you can be new or experienced. Some of you might be new in this room today, and others might be experienced in this room today. You can be unsuccessful as a new or experienced trader and remain in the technical trader's trap. You might not have a trading system of your own. You might keep relying on other people's, what other people have to say, et cetera, et cetera. So both Steve and Stacy used to be technical junkies, but they've transformed themselves into successful entrepreneurial traders by moving to the right, the transformed trader. So a new trader can move to the right, and a new trader can develop good habits right off the bat. An experienced trader will have to change some of those habits and really work on him or herself, right? So we want to be on the right side of the quadrant as a transformed trader. That's where we want to be. So let me ask you a question. How many of you think that trading looks simple? And how many of you think that trading is easy? And how many of you want to know the difference between simple and easy? Well, I'm going to tell you, making money in trading is pretty simple, right? Even as a newbie, you can make money, not all the time, but you can make money. But keeping it isn't easy. So making money is about understanding the market, but keeping the money, it's about understanding you, the trader. You. So whatever's going on in your life will affect your trading life. If you're disorganized in your personal life, it will affect, you will likely be disorganized in your trading life. If you're a little bit impatient in life, you might be impatient in your trading life, pulling the trigger too soon. So these are all things that you can work on, that we can all work on. Van Gogh, if you hear a voice within you say you cannot paint, then by all means paint, and that voice will be silenced. So Van Gogh wasn't well known at the beginning of his career, but he kept painting. And practice builds confidence by continuing to build new skills and habits. So when we do that, we conquer those inner voices which might stop us. We all have inner voices, okay? And if you don't have confidence in your ability to learn new skills and habits, who does? You have to have confidence in yourself. All right, let's get to the habits. We're going to do habits number 5, 6, and 7 today. And let's start with habit number 5, 6, and 7. Understand and exploit your unique trading personality. What trading style do you prefer? All right, we have long-term position taker here, medium-term swinger micro trend trader here, and short-term momentum or day trader here. Whether you are one or the other, like traders ask me, how do you make the most money, being a long-term position taker or a short-term momentum trader? That's not the right question to ask, because it really depends on your trading personality. I mean, there was a time when trading, I really love day trading, and I like to trade every day, and now I don't. I mean, I'm a swing trader. I don't like to trade every single day and sit and watch the market. So you need to know what you're capable of doing and what your time is like. So for example, if you enjoy sitting in front of the screen watching the market action, you may prefer momentum or day trading. If you like to see your profits quickly and you don't like to see them go and draw down, you might prefer short-term momentum or day trading. Most traders starting out start with short-term momentum or day trading. But if you have a full-time job, you won't have the luxury. You might not have the luxury to practice short-term momentum or day trading unless you trade at night in the Forex markets, for example, in the Asian session. I'm assuming you're in North America. Okay. So if you like to analyze the markets and establish your trade plan and let your trade play itself out and understand the risks, you might be better suited to swing trading. You might set 3 different profit levels and hold positions for, between 1 and 3 days, for example. And I'm really in favor of being a little bit aggressive with the profit taking and not to let a position that had been in profit go into loss. I think that's, honestly, I've experienced so much myself, obviously, but I think most traders would rather take profits, and so would I. So that's why I suggest splitting your position into 2 or 3 positions so you can take profits quickly on the first position and then let the rest ride when you're in a comfortable break-even position. Because obviously, if you're going to, I'll talk in Forex terms now, if you're going to make 200 to 300 pips on a trade and lose 30 pips on a trade, you're going to want to manage you have to manage your positions in a certain way to take profits early. And that is exactly what we do in our trade alert service, which I'm going to talk to you about at the end. We make 1 to 2 to 300 pips on trades, and when it's a losing trade, we're out early on. So I'm speaking from experience here. Now, long-term position taking, that's good too. You're going to be looking at the bigger charts. But the bottom line is, when you're taking long-term positions, you're looking at your trades maybe once a month, and you're going to make the same amount as a swing trader who might review the trades once a week. And you're going to make the same amount as a day trader who will review the trades at the end of every day. And I always taught, like forever, ever, if you can make, well, I don't know if you trade stocks, certain percentages, or Forex, certain number of pips, like 200 to 400 pips in a month, you can get that from either trading any of the trading styles. Now, I'm going to just talk to you. That's one thing about how often you take your positions. But the other thing is, are you a discretionary trader or a systematic trader? So there are 2 types, and systematic and discretionary are at opposite ends of the spectrum. And of course, down below we have fully automated trading, algorithmic, black box, high frequency. I'm not going to touch on that today. That takes a different skill, and that takes programming, and you can be that type of trader too. But I'm really going to focus on conventional / manual trading, discretionary, systematic / mechanical, which could have some semi-automation. Okay, semi-automation. So a system trader will spend hours each day testing systems on several different markets. He or she might trade 20 different markets using a mechanical system with very little emotion attached to individual trades. So that's one of the good points about a systematic system. It enables you to remove the emotion. Okay, with discretionary traders, they pore over the charts, then make decisions and watch the screen in order to pull the trigger for the trade, hopefully having done the trade plan first. You still have a system, but there is a human component as well. And you might not pull the trigger every time. And that might be by decision, or it might not be. It might be just fear grips. Or you might assign probabilities to the trades and only take ones with higher probabilities, right? There are many ways to go, but the decision to go systematic or discretionary depends more on the trader's temperament than on objective results or numbers. You're going to need to know what your numbers are, performance metrics, no matter what system you use, no matter what path you choose. But the most important thing is it's time to develop your own system, and so that you can be comfortable in your own skin with your own system and not rely on other people. So successful companies have winning formulas / systems, and they execute that formula or system consistently the same way every single day, and that breeds success. Now, if you can do that with your system, then guess what? It might get a little boring, but boring is good in trading. I'm sure you've heard that before. So develop your own game plan or system for your trading style and temperament. Develop confidence in yourself to follow it. So that's habit number 6, follow a system. So we just touched on understand and exploit your unique trading personality. Now we just discussed follow a system. So we're still on follow a system. And here we have chart setup, general rules, and entry and exit rules. You're going to have to set up your charts. And many of you will trade with indicators. Many of you will trade without indicators and just use price action. It really doesn't matter what you use as long as you use it consistently. You also need to know what markets you're going to trade. Be clear about it. Write it down. What time zones you're going to trade in. Be clear about it. Write it down. And time frames you're going to trade. Be clear about it, write it down. I personally trade with 3 different time frames. So I'll look at the daily and the weekly just to get the perspective, to get the context, and then I'll go down the time frames to the 4-hour and then take trades off the hourly. For day trading, you're going to do it a little bit differently. You're going to start, maybe you look at the hourly as your bigger time frame, and then look at the 15-minute, the 5-minute, or the 5-minute and the 1-minute to take your trades. So you're going to dress up your chart with your indicators or without your indicators, and your lines, your trend lines, channels. I'm big on trend lines and channels. General rules. That's just a set of rules that hold you true all the time, that hold you accountable. Right? It reminds you to stick to the plan. If that's one of your rules, stick to the trade plan. Write the trade plan and stick to it. That could be one of the rules. Because when we let our human brain get in the way, guess what? We forget, we don't focus, we just want to do things like our mind just wants to do things its way. So we really need to practice on the discipline part, and the rules kind of helps with that. Entries and exit rules, what triggers the buy and sell decisions. That's your trading strategy. And your exits include your stop losses and your targets. So all of these have to be pretty specific when you're in a trade. Otherwise, what are you going to do? You're going to take the trade and you're not going to know. You're going to be at total loss for managing the trade. You won't know what to do, right? Okay, let's talk a little bit about trade management strategies. These strategies, these 4 strategies, go from simple to more complex. And which strategy to choose is a function of the trader's experience. So you're going to start out as a trader. If you're starting out as a trader, you're going to start out with 1. Get in and out all at once. I mean, that's really about as far as you're going to go. You're going to get in and out all at once, and you'll be happy with that. And you'll say, okay, I'm going to set my stop loss. I'm going to set my profit target, and I'm going to try to win 7 out of 10 times. Okay, and if I win 7 out of 10 times, then I'm going to be profitable. And you're going to practice that so that you get your win-loss ratio high. Now, the next is getting in all at once and taking profits at various levels. That's what we do. That's what we teach. That's what I teach. Getting in all at once and then taking profits at 2 or 3 different levels. I call it the 3 profiteers trade management strategy. And that helps with getting in all at once so that you're getting in when you think the market is breaking. But what you can do is you can get in and out as you become more advanced. You can get in and out all at once, take profits on that position, and then once you're in a nice comfortable break even, you can get in again in the same trend and still have that 3rd position on from the 1st, if you get what I'm saying. But maybe that's similar to number 3, getting into the position at various levels and getting out all at once. So before you do that, you need to be locked in with some profits in your 1st position before you add a 2nd position to that. And the way we do that, as I told you in our trading signal service, is we get out of 2 out of the 3 positions early on and we ride the 3rd. And then the 4th is, I have a scratchy throat today, excuse me. Let me just take some water. Getting in and out at various levels, and that's the most complex. So I don't know where you are in your trading, but trade management is really key. And the day came when the risk it took to remain tight and set inside the bud was more painful than the risk it took to blossom. So is it your turn to take risk and blossom? I hope so, but only you can decide. But we are here, I am here to guide you. Okay, it's my hope for you that you take the risk and you blossom in your trading, obviously. I'm wearing my coach's hat today, I think. Absolutely, I am. Okay. Habit number 7, this is the third habit that we're going to discuss today. Plan the trade and trade the plan. So I have mentioned 3 terms here: trading system, trading strategy, and trade plan. Let's talk about each one. A trading system can be a collection of trading strategies. So you know that my bent is Elliott wave analysis, and I love it. I've done it ever since I started trading at the bank, because we hired a technical analyst, technical strategist from the Chicago Board of Trade, and he taught us, all the traders on the desk, Elliott wave analysis, pivot points, among other things, and he prepared daily analysis for us, and that was great. So I learned Elliott wave analysis early on, and Elliott waves are about the market cycles. So you know what the market cycles are. I don't have to tell you. The trends and the sideways markets, right? Trends and corrections. Those are the market cycles. And when do we want to be in? We want to be in during the trend moves. We really want to be in. And when the market is sort of hanging out doing nothing, we don't want to be in all the time unless we know how to trade the sideways markets. So there are different trading strategies that you could use, maybe for trading trends and for trading sideways markets. That's what I mean by trading system. Trading system also includes what your analysis is going to be. If you're going to use Elliott wave analysis, you're going to use pivot points, or you're going to use Fibonacci, or you're going to use harmonics. It doesn't really matter. It's all part of your defined trading system. So it's not only a collection of trading strategies, but it's really what your trading is all about. Map it out, lay it out. So that's the bigger picture, the trading system. Then we move down to the trading strategy. With the trading strategy, you might have a couple, like I said. Your entries and exits could be based on price action, analysis techniques, or chart setups with indicators. Whatever it is, you need to be consistent with your trading strategy. And once you define your trading strategy, in other words, where you're going to get in when the market does such and such, and how you're going to get out, how you're going to manage your trade if the market moves in your favor, or the move doesn't move in your favor. So that's your trading strategy. The trade plan is the set of rules for when a trade opportunity arises, right? So once you have your system, you have your strategy, and the market is setting up for you, that's where your trade plan comes in. And I'm going to show you, actually, I have a trading blotter that I developed. I'm going to show you that in probably 2 slides from now, which is like your daily plan, how you get organized. Now, this stuff that I'm telling you, most traders don't want to hear about this, right? And especially if you're new starting out, I would tell you right now that probably the more experienced traders are sitting here saying, wow, I need to pay more attention to this stuff. And the new traders are saying, ugh, I don't need this stuff. I just want to trade. Just teach me how to make money. Yeah, just teach you how to make money. If you do all of this, you will be prepared to make money. Okay, I have over 30 years trading experience in the markets, and it's really, really important. And I spoke at the Chicago, what's today? Today's Thursday, right? So on Tuesday, I spoke to the Chicago Traders Expo 2 days ago, and I had the pleasure of sitting in on a few, some of the other speakers, because I like to do that. I like to listen to other speakers sometimes. I don't get to do it that often. And I'll tell you, every successful trader has the same messages to give over. Every single one. They say the same things. So we just have to listen. So trade plan, set of rules for when a trade opportunity arises. Okay. The path to greatness lies not only in our performance, but in the systematic practice we put into the performance. Trading mastery is about internalizing patterns, rehearsing execution skills, learning from the market feedback, and preparing the trade plan. Now, sometimes when you get good at your trading strategy and you practice it over and over and over again, you will be able to be intuitive about the market and instantly see your pattern and instantly know what to do, but it takes a lot of practice. So a long time ago, I developed a trading blotter, which lays out the analysis, the checklist, the looking for high probability trades on the checklist, and then the trade plan and the post-market review. Now, I got the idea of a trading blotter from when I worked at the bank, because I literally had a trading blotter in front of me, and I would look at, even though I traded Forex, I would look at the other markets, like what was going on in the stock markets, what was going on with interest rates, what was going on, so in the bond markets, what was going on with gold, what was going on with oil. Like all these things, I wanted to know what was going on, especially at that time I was trading sterling, so I really needed to know what was going on with the oil. That was a big mover for the British pound. So that's where the idea of the trading blotter came from, writing down all of the information. So this is the trading blotter, and you can design your own, really, online, whatever. But the important point is to see what goes on it. You want to do your analysis before your trading session, and you might spend part of your analysis might be reading articles, doing fundamental analysis, finding out what's driving the market that day or that week. I think that the fundamentals are really, really important. Even though I use technicals to trigger trades and I use L8 wave analysis, the fundamentals are really, really key. And once a month I do a market analysis webinar where I actually go through the fundamentals to see show what's driving the markets. So that's the top row. Then the second row is divided into two parts: checklist on the left and trade plan on the right. So your trading strategy you might have develop a checklist for it so that you know what your indicators are saying, or what the support and resistance lines are saying, what your pivot points are saying, whatever it is, or your L8 wave analysis is saying, whatever it is that how you're analyzing the markets, that's what you're going to have on your checklist, especially if you're a discretionary trader. And you're going to memorize it, you're going to learn it, so you might not need to do this every day. The trade plan is on the right, and that's where you literally write down where you've taken your position, where you've pulled the trigger, and where you're going to take your loss and where you're going to take your profits. So that's your trade plan, so that you don't forget, and you want to put it in your trading system. That's in your trading platform. You definitely want to put it in your trading platform so you don't start changing your mind. At the end of the day, if you're a day trader, you're going to do your post-mortem analysis. So you're going to ask yourselves all of these questions. What were your feelings before trading? What about your actual trade planning? How did that go? And what were your actual trade results? If you're a swing trader, you might do that at the end of the week. If you're a position taker, you might do that at the end of the month. And you will know, you will see some patterns. You will get to understand yourself as a trader and understand what you do, right? Was I in a good frame of mind? Had my last couple of trades performed well? Was my personal life running smoothly? Was I in the zone? Did feelings of perfectionism creep in? Was I feeling overconfident? So if you answered positively for all of these things, then maybe your trading went well that day. Could be. But if you answered negatively that day, if you were all scattered, if you had things going on in your personal life, then did it show up in your trading? Just take note of it. That's all I'm saying. Just take note, okay? Actual trade planning. Did I plan my trade based on solid homework preparation? Did I get all confirmations I needed for a high probability trade? And we speak in terms of probabilities. With my system, we use the wavy tunnel to trade the elite waves. It is we do have indicators on the charts, but we talk about high probability trades. Once I entered my trade, did I trade my plan? Was my trade impulsive or based on someone else's tips? I know, I mean, I've spoken to so many traders who get get news from other traders, and especially stock traders, recommendations, and they're busy taking other traders' recommendations. Then I had one student who took my program, and he used to do that. And then now he knows how to analyze the markets himself. He still looks at the recommendations. There's nothing wrong with that. But what is wrong is just blindly taking somebody else's recommendation without doing your own analysis. So now he does his own analysis. He's so happy. He weeds out the trades that he doesn't want to take. He makes choices. He chooses the trades he wants to take. Was I satisfied with my results, or did I show regret? Did ego take over? So these are important things to ask yourselves. And then actual trade results. Were your targets hit? Were your 3 targets hit? Was your stop hit in profit? Did you exit in profit? Was your stop hit with a loss? Did you exit with a loss? So I'm not telling you to use this. I mean, everybody has a different personality, like I said, but this is just a guide. Okay, so getting started on your trading journey. We just learned 3 of the 10 habits of successful traders from my book, and learning them will hopefully help you save time and effort, make more money, and achieve your full potential as a trader. So the simplest way to succeed in trading is to learn from the best and model their habits. And why should you practice these habits? Because if you do practice these habits, you will be able to achieve your goals, hopefully. How can you replace your negative habits with positive habits? When you examine positive habits of successful traders, you might discover your own habits that prevent trading success. So find out how you can replace the negative habits with the positive ones. And I don't really like to use the word discipline. I know I said it a few times during this presentation, but I'd rather replace the word discipline with habits, because I think that we can all create a good habit if we practice it long enough. I mean, it's been said that it takes 21 days to build a habit. I don't know, but it's important to replace our negative habits with positive habits. Okay? And it's my hope for all of you today, that you achieve much personal and trading success in the many years to come. Now, I'm going to take some questions, but I just want to show you what I started out by saying at the beginning. I want to introduce you to our services. Every day, we provide daily wave counts, which provides the context for you. So that could be your analysis. And then, of course, you're going to have a strategy. So our Elliott Wave Desk service, just like I told you, I had my personal Elliott Wave analyst and strategist by my side on the trading desk at JP Morgan in New York. You get to have your own personal Elliott Wave strategist by your side by joining the service. It's elliottwavedesk.com/start. It's a very special price today for 1 whole month. And this is what the service includes. It includes wave counts and a daily video on 16 different markets. 6 currency pairs, the dollar pairs, the euro, the pound, the Aussie, the dollar yen, the New Zealand, and the CAD. Then the S&P, the Dow, the NASDAQ, the Russell, and the DAX, so 5 stock indices, the 10-year bond, gold, oil, and Bitcoin and Ethereum. So this analysis is done daily. Plus, we have trading alerts. And the trading alert service is up 2,563 pips since January, using the trade management approach that I discussed, taking 3 positions and riding the third position a couple hundred, 200 to 300 pips, and getting out of the first 2 at profit and taking small losses. That's how the trading record is so good. It's roughly 400 pips a month. Okay, these are the results. 78.6% return since January. That's a Fibonacci number, and I didn't even realize that. That is so cool, isn't it? 78. Wow. With a 6.48% maximum drawdown. So this is since January 1st, and it's an excellent track record. Obviously, it's excellent. But I'm telling you, it's all from taking small losses and taking big profits. You can do it. It takes practice. It really does, but you can do it. You also get a 4-module course. So module 1 is on becoming a trader. Module 2 is on market structure. So support and resistance, pivot points, everything. And module 3 is the fundamentals, because I think they're really, really important, and candlestick analysis, because I think candlesticks are really, really important. And module 4 is just a touch on Elliott wave analysis. It's $17 for the first month. It's a great, great opportunity for you. We're also giving a bonus, module 1 of the Elliott wave series. So if you sign up today, you will get this $17 price, elliottwavedesk.com/start. Now, I want to take some questions. So how do you get a hold of the daily trading blotter? Well, it's not online. You get it with the book. Okay, so if you buy the book, you get it. It's there. But send me an email, Jody@fxtradersedge.com, Jody, and I'll send it to you, Jody@fxtradersedge.com. So there's another question. Does your book explain the wavy tunnel? Hi, Philip. No, it doesn't, because the book is all about the 10 habits. So I do have a few chapters in there on technical analysis and on how to Elliott wave analysis. Yes, I do, because I had to discuss the market cycles. But the book is mainly about how to run your trading business, and it goes through the 10 habits. It has a whole online business plan that you can download in the companion website that you can fill out. You don't have to fill it out all at once. So that's the way. That's how it's structured, the book. Okay, are there any other questions? I do hope you enjoyed this presentation today. I have a few minutes to. Okay, after a month, does the monthly price change to $2.99 a month? No, after a month, it probably should be $2.99 a month, but no, it's $75 a month. That's the monthly fee, $75 a month. Okay, that's the fee. So it's $17 for the first month, and then $75 after that. And you can certainly, we also have some Elliott wave primers in there, and we have 4 different videos in there which really show you how the wave counts are, how we do the wave counts. It's quite complete. What is the success percentage using Elliott waves? Well, I told you what our success is from our trading service, which uses Elliott waves and the wavy tunnel. And this is it. Okay, it's a pretty high return, 2,563 pips this year, 78.6% return. The truth about Elliott is that you need to validate the Elliott waves. You need to learn that, and you will learn that in our service, because that's Juan is our Elliott wave strategist, and he is always talking about validation in every single video. You're not going to be the first one into a trend. You're going to be in once it's validated. Okay, good question. And since everybody is different, every trader is different, you know that every result is going to be different, right? Every result is going to be different. Are there any other questions? How many of you are using L8 waves to trade right now? Is anybody? You don't need, that's just one methodology. Okay, as long as you have, as we discussed in this session today, wearing my coaching hat, you just need a system, your own system. Make it your own. Even if you learn some education from me or somebody else, make the system your own. Your trading strategy is your own. Trading is a journey. It really is. And I've been doing it for such a long time. My gosh. So I can, I can relate to almost anything thing that happens in the trading world because I've experienced it myself. Yes, it definitely has a learning curve. Oh, you're talking about that. Okay. Yeah.